Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome to a fresh edition of Bazaar Morning Call. We're coming to you, as always, from the CNBC-TV18 Motilal Oswal studios. There's been plenty of tariff talk, plenty of geopolitical headlines, but finally, it's a Friday. I'm Surabhi Upadhyay, with me as always, Nigel D'Souza, and Rima keeps us company this Friday morning. Hi, guys.
Hi, with the lingering trade tensions and the cautious optimism, I think the only good thing is that it's a Friday. We've wrapped up the week. Flat so far. We've underperformed the rest of the Asian markets, but today's a new day.
Absolutely.
Well, indeed, and we get into this weekend. I'll tell you what, guys, we need to pull through another 4 sessions, and then we have the longer weekend. And I'll tell you what, and if you want to travel anywhere, you know, even to a nearby hill station, everything is chock-a-block. I'm trying. There are three consecutive days, and everything is blocked, you know. So that's
You're going to be here.
That's good. No, I'll make something happen. I have to. The 2 little kids are not going to let me do that. But, you know, so people are looking forward to that mid-August holiday. A long weekend. After a while, I think.
And this weekend is Rakhi also, right?
Yeah, special.
Festivities started.
The festivities have started, right? The feel-good factor.
Absolutely. And I've been speaking of festivals, so much rides in this festive season for the market as well. And we'll talk about that as we go forward. You've heard that from corporate commentary throughout first quarter. All hopes pinned on this festive season. But before we get to that season, we have to still get through a lot of the global headlines. So let's straight away get to it. Now, the headlines this morning, to begin with, the most important of them all is that President Trump was asked whether there will be any immediate near-term further negotiations with India on tariffs. He's saying no, not until that issue is resolved. It seems like he's referring to, obviously, the oil purchases. Take a look, and then we'll take it from there.
You expect increased trade negotiations, since you've announced the 50% tariff?
No, not until we get it resolved.
So there you go. Straight talk, plain speak, whatever you want to call it, coming in from the U.S. president. Clearly, there are issues out there. But do remember that yesterday, this whole talk of a meeting between the U.S. president and Mr. Putin, and then, the word that came in from Mr. Zelensky about looking to end the war, all that triggered the short covering. So we'll see if something more can come out of it. Now, I'm going to continue with the geopolitics before I come to markets. What else do we know? Prime Minister Modi received a call from the Brazilian leader, from the Brazilian president Lula da Silva yesterday. And these overtures are important. Remember, we had comments from the Chinese supporting Brazil, now Brazil calling India. Very, very interesting overtures happening between the BRICS nations. And, of course, now it is official that President Putin will be visiting India. The date is not yet clear and final, but it's being worked out. So very, very interesting geopolitical sort of adjustments, perhaps, between the BRICS nations, looking quite interesting. And then Prime Minister Modi travels to China as well for the SCO summit later. Now, amidst all of this, let's get back to some, inputs that we're getting on China. On China, as the market has been believing, it seems that this 90-day window of a tariff pause, that's going to be extended. And how do we know that? Because we had the U.S. Commerce Secretary, Howard Lutnick, speaking to Fox News yesterday. And he says, and I quote exactly, "I think we're going to leave that to trade team and the president to make those decisions. But it feels like they're going to come to an agreement and extend that for another 90 days. So the Chinese seem to be the only major trading partner where the U.S. is willing to give in a little bit and negotiate. Otherwise, it's been pretty much a 0 or 1 from the U.S.'s side. So this is where we are with respect to trade. Now let's talk markets. Yesterday was a mixed session for Wall Street, but it was a very choppy and volatile session as well. You had the Dow ending about 0.5% lower. The S&P was all over the wild ride, but then it recovered to finally close flat, and the Nasdaq managed to eke out some gains. A lot of chatter in the market about the next people who will come into the Federal Reserve itself. And Trump yesterday finally announced the successor to Adriana Kugler, a gentleman by the name of Stephen Mirren, who's known to be a close Trump aide. But he's only taking over till January, till Ms. Kugler's term actually officially ends. So therefore, there was not too much of reaction in the bond markets. In fact, the yield was hardly changed, 1-2 basis points here and there. And the US 10-year, this morning actually it's climbed up a little bit. It was 4.24 till last evening. Now it's 4.25. the bigger guesswork continues on who will be the next Fed chair. And that's where Christopher Waller's name has come up. This is as per a Bloomberg report. He's, of course, one of the current Fed governors, and he's widely respected in the market as someone who really understands monetary policy and the way financial markets work. So that was taken very well. That indication was taken well by the market. The dollar managed to move up slightly, but not too much. The dollar is still continuing around the 98 handle, the dollar index, that is, around that pivot. So a little bit of an increase coming in from lower levels. And we have seen that narrow range continue. Now, for India, where do we stand tracking all these geopolitical headlines? Yesterday, we had a great helping hand from the short covering bounce. Very, very sharp recovery as geopolitical, overtures indicated that maybe there's some breakthrough, in the coming days on the Ukraine war. But we have to see. Now, today is a fresh day. The expiry factors would be behind us. So let's see if some of these issues will linger. But what we know right now is that these geopolitical worries, these tariff issues, they're not out of the way. And FPI selling is going to be the key watch point. And we'll talk about that. Rima will mention the numbers in just a bit. But as that FPI selling continues, and it has, DII flows remain extremely crucial, and Monday we'll get the flows. And you heard Nilesha speak to us on this show just a couple of days back that expect record flows in July, and that's where the market will keep its faith. Rima.
Well, let's just quickly take stock of Asia this morning. Broadly lower, barring a Nikkei. The Japanese markets have surged close to about 2% in opening, and that's because we've had some strong earnings from SoftBank. SoftBank is currently trading with a gain of about 12%, and even Sony is higher by nearly 4%. So that's, boosting Nikkei, but the rest of the markets are a bit subdued. So Hang Seng's down close to about 0.5%. The Korean markets, that's Kospi, also lower in trade. Back home for our own markets, we had that smart intraday pullback in the last 1 hour of trade. The Nifty recovered about 250 points from the day's low and finally ended around the 24,600 mark. Now, technically, just in the immediate term, resistance could be around 24,700 to 24,800. That's a level that you can see, that's the intraday high. We've tested a couple of times just in this week itself. Now, week to date, the Nifty is absolutely flat, and given the lingering trade tensions, the escalation, we have underperformed our Asian market peers, where Taiwan is up close to about 3%. Japanese markets have soared over 2%. In terms of flows, big buying seen by the DIIs yesterday, about 10,800 crore. The FIs sold 5,000 crore in the cash market. They've net sold 16,000 crore in August. And remember, this is after dumping nearly 48,000 crore in the month of July. Lots and lots of stocks to watch today, but some of the important ones, one of them is Titan, strong margin beat. On Bharti Airtel, promoters are looking to sell in a deal which is in excess of $1 billion, so about 0.8% equity. AU Small Finance Bank, and this is a stock which is down 10% in the last 1 month, so you should watch for this. It's got an in-principle approval to become a universal bank, and big number is expected. SBI and Tata Motors in particular will announce their results. So that's on my radar. Nigel, what are you looking at?
Well, yesterday we had a good bounce, right? It was a weekly expiry, and we highlighted a couple of oversold levels, and from there the Nifty went ahead and bounced. But it could be a count of weekly expiry as well, and two factors that stood out. One was intraday, the PCR went to around that sub 0.7 odd, which is normally the indicator where you get a bit of a bounce. And as we have been saying for the last many trading sessions, that the FIs, well, they are net short as well on the index. So, moving to what the FIs did though, by the end of the day, you were wondering whether or not they were covering their shorts. Actually, on index futures, they didn't cover their shorts. They added, shorts yet again. They added close on 6,000 contracts. And on stock futures, well, there was a mix of activity out there. Some long addition, some short addition as well out there. The good news is even X of that block yesterday, it appears that the FI selling has gone down, quite a bit. And X of that, there could be some mild buying as well. So I'll be looking at today's, block deal very, very closely. That's with regard to Bharti Airtel. And then trying to strip out what is the core FI number looking like, because that selling has reduced, which is good news. The FI positioning, though, on the stock or on the index futures, well, that's aggressively net short. 91.5% positions on the short side in absolute contracts, around 1.75 lakh contracts. So we're closer to the peak levels that we have seen. In the past, we've seen a number a little over the 92%, and we've seen the contracts, after adjusting, it's closer to around 2 lakh contracts. So the FIs are net shorts, not such a bad thing, but this market needs to stop falling. Once it stops falling, then these shorts will start getting nervous in the system, and that's what could cause a bit of a bounce. Moving to, the other important point. For the last 5 trading sessions, the Nifty is making lower highs. So for today's trading session, you'll at least wanted to get first past this level, because otherwise, as that chart is telling you, on a day-to-day basis, you're making lower highs, and that trend needs to be broken. The PCR, as I said, yesterday it had moved to around 0.7. That's popped back up. It's around the 1 mark. So that's around the mid level. And there are, aggressive call writing that we have been seeing. And that continues as well. Now, in yesterday's trading session, you had the 24,500 call, added close to around 20 lakh shares. 24,600 call as well, did add close to around 12 lakh shares. Both of them, you punch in the premiums and you get a rough number in terms of the near-term resistance mark, which comes in at around 24,750 odd mark. That's the important mark. For today's trading session, you'll want the Nifty to get past that. And then, in fact, you'll be looking at the 20-day MA. So that's the important resistance levels that come up for you on the screen. On the put side as well, there's been a fair bit of addition. At around the 24,500 put, 24,400 put, and just punching in the premium out here. You're looking at yesterday's low as an important support zone and the 100 MA. And from here is when we bounced, in yesterday's trading session as well. So that's going to be the important mark. Just one stock, Bharti Airtel. Last few months, the stock has been a little bit in a consolidation phase. Today, once that block gets out of the way, it'll be interesting to see how Bharti Airtel does, because the last few months, in fact, it's not done much. I'll keep an eye out on this one.
Okay, all right, absolutely. So let's watch out for that block on Bharti and a lot of those levels. And for starters, let's see if the Nifty can at least defend that zone of 24,400, 450 thereabouts. Well, let's kick it off then. The equity call of the morning coming in, and this is a call coming in from Harold van der Linde of HSBC. He says that at this juncture, we find India to be more of a stock picker's market than one driven by top-down macros. He says they are less worried about tariffs than weak demand and elevated valuations in India. They're neutral from a regional perspective with a 2025 end target of 85,130 for the sensex. He says their top 5 stock ideas are Trent, Infosys, Godrej Consumer Products, SBI and Phoenix Mills.
Okay, let's move on and get some opinion on how you should navigate the current tariff chaos. Neeraj Seth, founder, CIO at 3R Investment Management, is now joining us on the show. Mr. Seth, thank you very much for joining in. Give us your initial thoughts. What have you been doing with your portfolio? Have you been making any ins, any outs? And how should one, there's so many there's so many signs one needs to juggle with.
Sure. So I think overall, there's certainly a lot of noise, and it's extremely important as an investor. First thing to do is you try to separate noise from what matters. And I think on your point about tariff, I do think there is an impact, obviously, whether it's from the overall growth impact from the export side or the sentiment impact from a relationship perspective. Looking at the markets, I'm not sure the market impact is that big. So not a huge lot to change here, to be honest. And there's still a lot of more news to come. There's still obviously follow-up discussions before the 27th of August comes and the additional 25% kicks in. So I'm not sure you want to actually have knee-jerk reactions in terms of changing a lot in your portfolios other than just making sure that you're not overexposed to certain sectors which are impacted by tariff.
Neeraj, hi, good to have you on. So what's the sense? I mean, has the market seen the worst of this tariff hit? Does it get better from here, or is this actually just the beginning of perhaps greater FII outflows?
So I think the worst of the noise, which was in the April 2nd week, the Liberation Day, I still believe that's behind us. Obviously, the noise is not going to go away, which is an important aspect to keep your eye on. From an FII perspective, I do think we have seen a significant amount of selling and outflows, but given the markets have been rather stable on a relative basis, and if I take a step back and look at the last 12 months, market is still below in case of India compared to September last year. So you've seen an implicit correction, and I do think you will see the stabilization in FII flows here once a lot of the weaker hands or the initial knee-jerk reaction is over.
Neeraj, you think by going by what Trump has to say in the last few months and the kind of, data, etc., we're getting from the United States, do you think actually all this activity by Trump is going to swift-in the pace of de-dollarization? The dollar has been weak, but all this, talk could swift-in the process. What do you think?
I do believe it actually, if not significantly accelerate, it certainly puts a zoom focus from a lot of people on the whole idea of de-dollarization, or more importantly, diversification. Now, if you look at whether it's the foreign central bank reserves or the trade or a number of other aspects, dollar still is the reserve currency of the world. I don't think that's changing or going away. but the diversification has already started. If you look at the incremental flow of dollars in the world, that incremental allocation is slowing down, and I do think that's going away anytime soon. The world will have to think about a more diversified way of keeping your currency exposures rather than being overexposed to dollar, whether it's your reserves or the risk assets.
Neeraj, is India still the preferred market in emerging markets or in Asia Pacific, or has that changed now? Because what were geopolitical tailwinds in the past have turned into headwinds.
Yeah, so there's certainly an impact of that you will see both in terms of the data and sentiment. Obviously, there's a growth impact. As I said, you can have a quarter point to a half point growth impact because of the export sectors taking a hit. The sentiment impact that you are seeing more from a technical standpoint in terms of the FII selling, I do see that obviously having some impact from a capital flow standpoint. But again, if I take a step back and look at the next decade or 2 decades, is there going to be some shift in the structural story from a growth perspective in India? I'm not sure about that. And if anything, this is a good wake-up call when you think about the economy from the 4-engine perspective of government, corporate, consumer, and exports. If you're seeing weakness in exports because of these, well, you need to find new products, new destinations for exports, but more importantly, deepen the corporate and the consumer side and keep the government spending stable. I do think the equation still works from a long-term growth perspective for India.
So, Neeraj, what are you buying in India now?
Well, I still like some of the sectors which are more domestic focused. The financials are still looking good. The domestic consumer sectors are still good. So I don't think there's a lot changing on that front. If anything, they continue to obviously grow more competitiveness as you see the growth in these sectors. So I don't think you have to change a lot other than, as I said, zoom in, look at which sectors, which is a small subset of the markets when you think about the exports aspect, specifically the one that gets impacted. You don't want to be too exposed to those at this point.
Neeraj, final question before we let you go. What are you expecting since we're going to be looking inward, monetary and fiscal? What kind of moves are you expecting? Because the economy is a little bit soft, but the hope is now we're getting into that festive season. Things start improving. There's going to be more more money in the hands of the consumers, and hopefully this economy gradually gets kick-started. What are you expecting?
So I still think, given the consumer is still, I wouldn't say weak, but on a relative terms weaker, and the corporate capex hasn't picked up, and there's some softness that can come from the standpoint of these geopolitical tensions. I do think the path forward is further cuts from RBI. I'm more in the camp of looking at a 4 handle as a terminal rate rather than where we are at 5.5. And from a fiscal standpoint, a little less so, given I do think the fiscal room is limited from a government perspective to expand too much. So that I, in fact, believe and hope that the fiscal path will be more towards consolidation and monetary more towards easing in the next 12 months.
Okay, all right. We'll leave it on that note. Thanks, Neeraj, very much for joining in. And we look forward to another conversation soon. Well, with that, let's quickly tell you what else is lined up on the show today. It's a packed next couple of hours coming up at 8:35. The management of Gokuldas Exports will talk about not just their Q1 numbers, but life in this new 50% tariff world. What are they thinking in terms of business continuity? We discuss that with Mr. S. Ganapathy. At 9 a.m., we'll have the management of Kalyan Jewelers joining in on the company's Q1 performance. At 9:20, Krishna Sanghvi of Mahindra Manulife Investment Managers joins in. He's our market master of the day. At 9:30, we get chatting with Uno Minda. The company will talk to us about their Q1 performance and, of course, how their export business is impacted, if at all, in this fast-changing world. After that, we'll have Ashok Santhalia of Titan joining in. Looks like a pretty good quarter at Titan, so we'll discuss some of the details with him. And at around 9:50, we'll have Nissan Joseph of Metro Brands talk about consumer sentiment, demand, and how the first quarter has been for them. And then we get to Crompton. Crompton, like a lot of other electrical appliances and cooling products companies, has had a rough Q1, tough start to the year. Does it get better? We'll ask the management. And finally, in our special segment, It's the Economy, Lata will be talking to Mukesh Kumar Surana, former CMD of Hindustan Petroleum, to understand the dynamics of Russian crude versus US crude.
Well, time to slip into a quick break, but a lot of stock-specific action to track. We get at that in just a bit in our special Top 10 segment, but we're looking at AU Small Finance Bank, Titan, Cummins, LIC, BSE, and Kalyan Jewelers. All of them will be reacting to positive news flow, while you have Bharti Airtel, HPCL, Bioon, and Godrej Consumer that will be reacting to negative news flow. Take that break, come back. We get into further detail on all of these names.
Welcome back. The Indian markets have been showing resilience this entire week. Yesterday, there was a bit of a weakening bias intraday, but thanks to short covering, we managed to stage a smart recovery and ended absolutely flat around the 24,600. But let's prep you up for today's trading action. It's a Friday. Our entire research team is standing by with CNBC-TV18's list of top stocks for the day. And let me do the honors today. It's Bharti Airtel right on top. And here, the news is that according to sources, there is a large block expected in Bharti Airtel. The promoters, which is Indian Continent Investment, ICIL, is likely to sell a 0.8% stake equity. The floor price is at 1862, about a 3% discount to yesterday's close. The deal value is in excess of 9,000 crore rupees, and the promoters will have a 90-day lock-in. In fact, in the last 1.5 years, or nearly 2 years, this is the third instance of the promoters selling part of their equity in the company. They still have a majority stake. As of June, they had 51.26. So even if they sell about 0.8%, which is expected in today's block, they will still have a majority holding. But you know what people have been saying is that ever since they bought that BT acquisition, the promoters at the Sunil Bharti Mittal level, the company has been slowly paring down their stake in order to, fund that. But we don't know. But for now, what we know is a large block, 9,000 crore plus in terms of value.
So it's a big one, and these blocks have been really skewing the way the flows are shaping up as well. And that's an interesting trend you highlighted. They've bought additional stake in BT, and then,
not additional. They had bought it 2 years back, and then since then, we've started seeing them pare down their holding
some in the Indian
list.
This
is the third instance.
Yeah. Okay, interesting trend there. We'll keep it on the radar. Let's bring in Mangalam then. Titan's numbers, at least optically, look really good, Mangalam. Tell us more. Morning.
Well, operationally, it's a very good performance. Remember, we know the revenue of the company already because of the first quarter update that they had given us. So the street was looking at just the operational performance of the commentary. And out there, it is positive. The jewelry business margin has expanded, and there has been a stellar performance in the watches division itself. So what's good? The EBITDA coming in at 1,632 crores versus street expectations of sub 1,500 crores. The margins coming in at 11.12%. Street was working with a number of 10.5%. And the net profit as a result of which a good 100 crore beat at 1,030 crore versus a poll of 930 crores itself. What is it that led the margin expansion? It was gross margins that improved by over 100 basis points, and watches EBIT margin, which actually doubled with a near 150% jump in the watches operating profit itself. The company has, however, said that there was an element of a one-off in the jewelry business, which improved their margin by 50 basis points. So that may not happen going forward. So the street's adjusting for that. But studded ratio at 29%, not a bigger decay than what we saw last year. International jewelry growing at roughly 50%, and the market share maintained at 8% with an eye on that double-digit mark. Expect the stock to see some green today.
Yeah, and I remember, categorically that Titan, when the Q1 update had come out, the stock had really fallen very, very sharply. So maybe now that the operational performance looks good, maybe some recovery today, we'll see. Mr. Ashok Sonthalia will join in to take a couple of questions and give us their outlook on the rest of the year.
Okay, all right. Let's hop across to Sonal. She's here to tell us about HPCL. Morning, Sonal.
Good morning, Nigel. Well, for HPCL, yes, there is a quarter-on-quarter improvement, but there was a refining miss that came by. If we talk about the overall numbers, revenues were up 1%, EBITDA up 31%, margins improved on a quarter-on-quarter basis, and profits also came in higher by 30%. However, refining throughput declined 1% on a sequential basis. GRMs at $3.1 per barrel is lower than the estimates and also lower than the benchmark GRMs by around $2.5 per barrel. Also, 21,500 crores of LPG subs under recoveries, they have not been given back to the company. So that continues to remain an overhang. Jeffrey says that they see likelihood of lower refining profitability as Russian crude consumption could drop going forward. And that remains to be seen for all these oil marketing companies.
Thank you very much for that. Let's talk about Biocon. Ekta, numbers are a miss. I think I saw profits down nearly 90% year on year.
Well, yes, definitely. But you have to compare it to estimates. That's what's most important. So, yes, there is a profit miss, but compared to estimates of around 102 odd crores, it's not as drastic. Now, in terms of the revenue growth, it was up around 14.8%. The street was anticipating 19% growth. The margins came in at 19%. The street was anticipating close to 21%, and the profit of around 89 odd crores. Generics business grew around 6 odd % year on year. So that's probably where a little bit of the dampener came through. Biosimilars was strong. It was up around 17.4% year on year. and the research business, which is Syngene, was up around 10.8% year on year. So the generics business was a bit subdued this time, and that seemed to have pulled down the entire set this time. The call is at 9 a.m., so more details from the top management of Biocon. But I expect the stock, based on just these numbers, to be in the red. Maybe the commentary could change the sentiment.
Okay, we'll watch out for the commentary then for sure. Thank you for that, Ekta. Let's get in Vamakshi, figure out how Cummins has fared in the first quarter. Vamakshi, morning, tell us.
Well, good morning, Surbi. A good set coming in from Cummins India. Keep in mind that this is the fourth quarter since the implementation of the CBCP4 plus gensets. Keep in mind that the revenue saw an uptick of almost 26%, came in 12.5% higher as compared to what the street was anticipating. And the growth in revenue is largely being driven by the exports business, which is up almost 34%. The domestic business too is quite healthy for the company, up almost 25%. The margins too have improved to 21.45%. Which is the highest level that we've seen since quarter 4 of FY24, and the company has also reported a 40% uptick in the net profit. And keep in mind that this net profit has come in at a record high. So overall, a good set of numbers coming in from Cummins India. The management says they are cautiously optimistic about their growth going forward. There's a con call scheduled at 12 p.m. So more details on that.
Stock closed at the day's high yesterday. It was up nearly about 1%. But let's talk about Godrej Consumer. Mangalam now joins in with the details.
Well, Godrej Consumer, if you look at the numbers, again, the revenue was revealed in their consolidated update itself. But importantly, the stock ended at the high point of trade yesterday. And there has been an EBITDA miss. The company said that it's the second half where they are likely to see normalized margin. So for the first half, and this is something that they had called out earlier as well, that margins would be below normative levels. But maybe the analysts were expecting a little more than what the company has delivered. Revenue at 3662 crores, street expectations 3665 crores, bang in line. The EBITDA actually has come in at 695 crores, a lot lower than street expectations of closer to 750 crores. And that implies that the margins at 19% are also a good 120 basis points below expectations. And that has flown down to the bottom line as well, 450 crores on the bottom line with expectations of 480 crores. The underlying volume growth, 5%, higher end of the 4 to 5% band that the street was working with. And consolidated volume growth has also come in at 8%, so that's a positive. It's been led by home care business, which is up 16% at 946 crores. But personal care, which is where the pressures are on account of the palm oil price inflation, and soap business, which is under transition, which saw only a growth of 1%. I expect the stock to open in the red, but that decline should be shallow because the consumer sentiment is looking up and margins are likely to recover from here on.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across back to Vamakshi. Vamakshi, tell us about LIC and BSE.
Well, let me first start off with BSE, Nigel. The revenue from operations saw an uptick of 13% quarter on quarter. This was largely led by a jump of almost 21% quarter on quarter in the transaction charges. The revenue was more or less in line with what the street was anticipating. The EBITDA margin, though, saw an improvement of 812 basis points, coming in at 65.3%. This is, slightly lower than what the street was anticipating. Nevertheless, it's still an improvement. Largely, the margin improvement was driven by the clearing and settlement expenses, which declined by 10%, and more importantly, the other expenses saw a dip of almost 51% quarter on quarter this time around. The company reported a net profit of 538 odd crores, an uptick of 9% quarter on quarter. It's a beat, and this beat is largely being driven by proceeds from divestment of a wholly owned subsidiary, which is BSE Institute. It included a net profit of almost 12 crores. So on the given the kind of growth that we've seen in the net profit, going with the green for BSE. Other than that, keep an eye out on LIC as well. The new business premium saw an uptick of almost 5%. It has come in higher than what we were expecting. The total APE is also up 2%. There's a slight miss out here, but look at the VNB. The VNB has seen an uptick of almost 21%, strong beat here, and the margins too have improved by almost 150 basis points to 15.37%, and a beat to here as well. So going with the green for BSE as well as LIC.
Okay, so give me some green, as they say. And Vamakshi's got plenty today with Cummins, LIC and BSE, all are three stocks. Let's go back to Mangalam. Let's see if he can give us some green. Kalyan Jewelers, sparkling or not, Mangalam?
I can give you gold and diamonds because it's 1% revenue growth that the company has reported. They've given us the first quarter update already. So the street was bracing for that 31% growth. What they weren't bracing for is a 38% jump in the EBITDA. So the margins have actually improved by about 30 basis points. Obviously, gross margins have come down because there's been a higher share of revenue coming in from franchise stores, but that's pretty much understandable. The profit after tax up nearly 50% from 178 crores all the way up to 264 crores. And this time around, South India showed a revenue growth of 30%, whereas non-South showed a revenue growth of 33%, and Middle East grew by about 27%. Same-store sales growth came in at 18%, and there as well, South was 20%, non-South 16%, because obviously South has a higher salience of gold, and the studded share absolutely flat at 30.3% versus 30.4%, and non-South, where the company has been diversifying, grew at is now contributing about 51% to their overall sales. So that's a positive. See some green on Kalyan Jewelers, especially after the big beating that the stock has taken from the top.
All right, Mangalam, thanks a lot for that. And in fact, we'll be joined by the management of Kalyan Jewelers later on at around 9 a.m. to talk about the past quarter's performance. But another big mover today is going to be AU Small Finance Bank. Gaurav joins us to tell us more about that. Gaurav?
Well, it's definitely a positive news for AU Small Finance Bank after 11 months of waiting, because now they have got in principle approval for the transition to universal banking. Remember, this is the first small finance bank to get this approval from RBI, and they had submitted this application in September 2024. So 11 months is what it took to RBI to take this decision. When we talk about this decision, this also comes up with many benefits in the likes of improved brand acceptability, lower cost of funds, lower PSL requirement, which is priority sector lending. Remember, RBI has cut down the priority sector lending requirement for small finance bank from 75% to 60% already. But with the transition to universal banking, it will cut down more to 40% for AU Small Finance Bank, or rather we can say AU Bank. Increased avenue for fee income is also something that we will be looking out for, and it will also aid the customer growth. In fact, when we talk about management commentary earlier, management had said that the 25% growth trajectory will likely to remain until the loan book reaches around 3 to 4 lakh crores. So definitely management also seemed optimistic in the last few quarters when it comes to universal banking license. When we talk about some other comments, they are also optimistic given that they will get more position for the loan book growth, and also they will open up the avenues for revenue. So it is going to be positive for AU Small Finance Bank definitely, but at the same time it also sets a benchmark for other small finance banks like Ujjivan and Jana, because both these banks have also applied for the license of universal banking. So all in all, definitely a positive news for AU Small Finance Bank, and as a result keeping the stock in green today.
Okay. All right, got that, Gaurav. Thanks very much. So adding AU to our radar as well. Let's quickly, in fact, recap our list of stocks to watch today. The ones that have positive news flow are indeed AU Small Finance Bank. Then there's Titan, Cummins, LIC, BSE and Kalyan Jewelers. All of them, those four on the back of earnings. Stocks with negative news flow on your screens now. Bharti Airtel, expected block deal there. HPCL, Bioon and Godrej Consumer, slightly weak set of earnings. Okay, with that, let's move on. It's not just about all the earnings. We also have to look at stocks in focus on the back of the MSCI India Index regime. Hormuz is here to tell us who's in and who's out. Hormuz, morning.
Morning, Survey, and on expected lines pretty much, and 4 additions to the standard index, the India Standard Index, and 2 of them have been removed. So let's talk about the inclusions first, and the inclusions include names like Vishal Megamart, Vishal Megamart and Swiggy, Vari Energies and Hitachi Energy India. These are the 4 names that have been included. The ones that have been dropped are Sona BLW and Thermax. They have been excluded, and the rebalancing will take place on the 26th of August. Now, if you talk about the inflows as a result of this inclusion, IIFL Alternates believes that you can see inflows of anywhere close to $300 million, with Swiggy being the lion's share here. Vishal Megamart may also see inflows of close to $260 million, Vari and Hitachi too around about $230 million each. Now, when it comes to the outflows, Sona BLW and Thermax can see outflows of anywhere between $120 to $160 million. Now, both of these names that have been excluded have been moved to the small cap index, and as a result of which they may see some inflows of close to $30 to $40 million as well. But when it comes to the standard index, the weightage of CG Power has been increased, and that can be resulting in inflows of around $55 million, while names like Asian Paints, Eternal, JSPL and Havells has been reduced, and Eternal can see a largest amount of outflow here of close to around $600 million as a result of this. Now, for the small cap index, we've seen 15 inclusions here, 6 names have been dropped. Well, notable inclusions here are, aside of Sona BLW and Thermax, include the likes of Nexus Select REIT and a lot of other smaller names as well. But among the exclusions, a notable name here is Bharat Dynamics. That has been removed from the small cap index, and as a result of this exclusion, you can see outflows of around $30 million, and the rest can see anywhere between $4 to $14 million worth of inflows. So on expected lines mainly, but keep an eye out on Vishal Megamart, Swiggy and Bharat Dynamics.
Thank you very much for that. And gold is also making headlines. It's COMEX Gold, which has hit a fresh record high. Manisha is now joining in. Manisha, it looks like Trump hasn't spared tariffs on gold too.
Oh, well, absolutely. We've been discussing for some time on how gold has been importing record numbers. U.S. has been importing record gold numbers in the first quarter of this calendar year. So January was a record ever import, and Feb and March were stronger numbers as well. And while, of course, there have been these conversations that gold and silver as precious metals would be spared because U.S. doesn't produce much of it. It usually imports many of these, including diamonds as well. But with Switzerland and with the kind of reading between the lines is happening, the codes for gold import also seem to be included, especially 1 kilobar and 100-ounce gold bars are included on tariffs here. So Switzerland at this point in time has 39% tariffs. So if you start calculating that, this is exactly what the street seems to be reacting to. So when you look at the U.S. COMEX gold prices, they hit an all-time high at 3,515. While the LME, the London spot is trading at around $3,400 an ounce. So we are trading with a $100 premium in the COMEX gold right now. Yesterday, during the New York session, Indian markets for gold also hit an all-time highs, and the expectation is that you could be looking at opening today around those levels as well. Well, tariffs will impact Switzerland the most because it's the world's largest gold refining hub, and that really seems to be supporting not just gold, but silver prices are trading quite in the positive at this point in time.
Okay, all right. But I guess, Manisha, move aside gold and silver. Now it's cryptos for US 401k, right? I think he's just signed that into an order this morning.
It has, yes. It happened in the U.S. markets, and we're looking at crypto prices as well, seeing a lot of support because of that as well. Surbhi, this has been an amazing year when it comes to cryptos, and all because of the kind of legislations that we've seen U.S. pass. The Bitcoin ETF spot is doing very, very well. We've seen that Genius Act being signed by the U.S. president as well. There are two more acts, Clarity and Anti-CBDC Surveillance Act, which also has been passed by the House, and Senate is now looking at it. But yes, with 401k retirement plans, it's a broader band of investments now. Earlier, it was only about stocks and bonds and cash. Now it's about real estate, private equity, and crypto as well. And this is exactly where the crypto markets seem to be taking a lot of support from.
Absolutely. Cryptos for your retirement. I don't know. Any takers over here in the studios? I'm not too sure. But Manisha, thank you so much for that. We'll catch up with you again soon in a couple of hours. Take a quick break on that note, come back on the other side. And we have the management of Gokuldas Exports joining in, the all-important conversation on the Q1 earnings. And now, life as it stands with 50% tariffs. We'll get some perspective with Mr. S. Ganapathy. And after that, we have Siddharth Khemka joining in. He'll give us some fundamental stock ideas for Friday.
Welcome back. Well, let's connect with the management of Gokuldas Exports. They reported their numbers, and also there has suddenly been a big scare because of these heightened tariff worries. We have with us Mr. Ganapathy, the Vice Chairman, as well as the MD at Gokuldas Exports, who joins in. Hi, sir. Good morning. Always good to have you on the show. Morning. Well, your shareholders will be waiting to hear from you because, these tariffs have suddenly weighed on the business. So give us a few details. Have you had any discussions with your customers? Have there been any cancellations that have come about? And do you see this big risk of business that was supposed to come to India now goes to competing nations?
So, with tariff, nothing is settled. So nothing can be predicted as well. That's the reality, right? So we had this incremental 25% tariff imposed just recently. Yes. And we need to see how that plays out because that's just so new that, discussions are on with various stakeholders as to how do we deal with it. But if you look at the tariff before that, which is the 25% on India, vis-a-vis like 20% on Vietnam, Indonesia, Bangladesh, and other competing countries, I think, that was something which we could still manage. 20% is the minimum tariff on most of the large apparel manufacturing nations. So 20 is the new zero in many ways. And 25 was just 5% above. We could have handled it. But an additional 25% is something which we are, watching. We are seeing, how long is this going to be before some normalcy could come in. It's very early to speculate on what is the impact of that on business. Suffice to say that India exports about 5 billion to United States. And it's not possible for brands or retailers to move 5 billion out of India to other countries overnight, because that kind of capacity may not be available. So this may take some time before capacity realignments can happen. In the meanwhile, the whole system will be under stress on account of that incremental 25%. And I think we have to deal with it. It's a very big number and a very big stress point. But that said, in the longer run, if this persists, we will see a significant erosion of business. But in the short run, I feel that there could be some normalcy or rational thoughts that can come in over the next 3 months or 4 months.
Indeed, sir. We hope for a rational Trump. We keep hoping, but some of the comments keep getting more irrational. So let's live in that hope. That said, so as you're clearing out, 25% is maybe manageable, but this additional 25% hits you hard. But now people are looking at risk mitigation. You have presence in Africa, Kenya, as well as Ethiopia. Will you consider moving a higher amount of your operations there, since they are, the tariffs that's levied out there is relatively lower? Is that something that you're looking at?
So obviously the business that on that side is growing because brands themselves are seeking out those regions where tariff is lower. For instance, Kenya and Ethiopia have only 10% reciprocal tariff. So it's going off a small base. So we export about $100 million out of that region, and that part will grow faster. As far as India is concerned, we let us still find a solution. But natural progression of things would be that business would seek regions with competitive tariff, and for us, it means that with manufacturing capacities there, we would see a higher growth.
Mr. Ganapathy, hi, good morning, sir. So let's try to sort of wrap our heads around this, because we do have numbers till they change. Now, let's assume that the 25% stays, and you're saying that could have still been managed and handled. So in that scenario, if you do a scenario analysis, in that scenario, would you have to shift any of your current production to markets like Ethiopia and Kenya or other countries? What are you thinking in terms of just a shift in manufacturing, if at all, at 25%?
So at 25%, I wouldn't foresee a huge amount of shift. Of course, the arbitrage will play, right? With Kenya and Ethiopia at 10% with vis-a-vis 25% for India, there will be a larger growth there. And that growth will come at the expense of multiple nations, not just India, because almost all other nations are at 20% or higher. So from that perspective, that region will grow. But I don't think it is only at the expense of India.
I understood your point. So you're not immediately looking to shift out at 25%, but in general, those markets will see good growth. I absolutely take that point. Now let's talk about at 25%. Now this 25% obviously has to be borne by the retailer, by the customer, maybe to an extent by you. So your conversations over the last couple of weeks, I mean, where do they leave the split? Because I think in the call, you did mention that there will be some pressure on margins going into Q2 and the rest of the year.
Right. No, that's absolutely sure. So this 25%, if we look at it, 20% seems to be that new normal, right, across the world. And that will come with eventually, I'm saying, not in the short run, maybe a year from now or maybe the next financial year, more likely, that, it will get passed on to the retailers, the end consumers. There are certain brands which are looking at increasing pricing for the end consumers. There will be de-speccing of garments or shrinkflation, as FMCG industry looks at it, where the value of the garment will be protected, but some features can be removed or reduced so that the pricing can be managed from a consumer standpoint. So multiple methods will be used by brands to keep the consumer pricing more or less less inflationary, and yet reduce the cost of buying, and thereby tariff kind of offsets it. So strategies will be adopted. As far as value chain or supply chain is concerned, initially over the 10% which was in place, the supply chain was absorbing a portion of it. I don't think when it goes to 25%, the supply chain has as much ability to absorb any further. So rest has to be managed in terms of pricing or in terms of product spec changes.
Got it. Mr. Ganapathy, we are out of time, so very quickly, did you speak to any of your customers yesterday at the current 50% tariff? Have they cancelled the orders? What is Q2 and Q3, Q4 going to look like in terms of top line? And again, coming back to that question about margins, at 25% tariff, for the sake of simplicity, what will be the extent of sharing of the burden, and how much could your margins get compressed?
So for Q2, those orders were placed long back, so I don't see any problem as far as Q2 business is concerned. For Q3, those discussions are yet to begin. So we have not seen any customer cancel any order so far, but discussions are on as to how do we deal with it, and it will play over the next 2 weeks, I think, for Q3. As far as the burden share for 25% is concerned, it's also speculative. As I said, our net profit margins are in single digits, net profit margin. So there is a limited room for us to absorb. I think the rest of it will have to be absorbed by the others in the supply chain, including the retailer.
Okay, all right. Thanks a lot, sir, for joining in. We'd like to have a longer chat, so we re-invite you in the next couple of weeks and understand how things pan out. But as you said at the start of in your initial comments, hoping for a more rational President Trump that'll make doing business, globally much better. Have a good day, and we'll chat with you soon. Well, let's hop across to Sid K, Head of Research Wealth Management at Motilal Oswal Financial Services, who joins in. Sid, morning, Friday morning. First comment on these textile makers. Gokuldas is down more than 20% in a month. What's your view on it? These are good companies, and this too shall pass. But what would you recommend at current levels?
Good morning, Nigel. Yes, happy Friday. I think the uncertainty, especially for these exporters, that continues. We saw a sharp rally when initially Trump announced a lower tariff for India compared to some of our neighboring and competing countries, the likes of Bangladesh, Vietnam, Indonesia. But so that was a big positive for some of these companies. But now with the additional tariff, as we just heard the management, 20% tariff was something that they could live with. But at 50%, it becomes really non-competitive for them. So I think market would react to these news developments, but we are overall hopeful of some resolution coming out over the next few days. We have seen that the President Donald Trump using these as a hard negotiating tactics for some of the other countries. Otherwise, the other option for India is to look for other trading partners in other regions like the EU, some of the other regions where they can build the business from a long-term sustainable basis.
Okay. Siddharth, hi. AU Small Finance Bank, that will be the stock in focus, universal banking license. Buy the stock today?
Yeah, Riba, hi. So first of all, AU Small Finance Bank, no longer a small finance bank, will be converted to a universal bank. But yes, a big approval for them. I think it is the first small finance bank to get a universal license under the voluntary framework. This is a major milestone, not only for AU, but for the entire banking industry in India. What we believe is that this is expected to not only enhance the brand positioning, it will improve a lot of business parameters, be it CASA ratio, the cost of funds can come down, it will increase access to urban affluent customers. The loan size restrictions will go away, and hence they can scale up to larger ticket secured retail, SME, mid-corporate lending. What it also will do is the PSL mandate will come down from currently 60% to 40%, and hence looking at a better yield on their overall funds. So near-term positives, what we see, credit costs could come down, strong loan book growth, potential to raise capital, and more importantly, a stamp of approval from RBI on the current management. So overall, very positive. We believe AU is well placed to capitalize on this transition, and near-term earnings recovery, potential capital raise, and continuity of leadership would reinforce this positive outlook. So we maintain a positive view on AU. We have a buy rating with a target price of 875.
Okay. All right. Positive view on AU. Got that, Siddharth. We'll take a quick break. Come back to you in just a minute. On the other side of the break, we, of course, have our technical experts joining in as well. We have Mitesh Thakkar as well as Shrikant Chauhan with ideas on today's trade setup.
Welcome back. Awaiting the pre-opening rates, the picture across Asia is mixed. The Chinese markets have opened absolutely flat. Hang Seng, though, has a downtick going for itself. That's down close to about 2/3 of a percentage point. The big headline coming out of Asia this morning is that perhaps the trade truce with China will get extended. Remember, otherwise tariffs on China would come into effect from 12th of August. But now the latest seems to be that this is going to get extended. So the negotiations will continue. So Hang Seng is subdued, China's flat, Japan's the one which is surging, and the gift nifty is suggesting a slightly muted open, 32 points lower. Get into a break, we'll come back with the pre-open. And we'll also get in some technical trades as promised with Mitesh and Shrikant Chauhan.
Welcome back. 16 minutes to go. Let's quickly get to our technical experts and look at the trading advice for today and, of course, the stock ideas as well. Shrikant and Mitesh, good morning. Great to have both of you in. Mitesh, what's the approach going to be today? I mean, index, stocks, and yesterday we got that great short covering bounce, right? But the issue is, what do you do now? Do you just stick to stocks?
Good morning, Surbi. Yesterday was very important in the sense that, yes, there was a bounce back towards the end of the day. We closed near the day's high, and also is the fact that we managed to defend the 24,500, 550 range. Very important technical level. So with that, I think, one, in the short term, it kind of gives a floor to the downside. But for a reversal, for a proper uptrend to develop, there's still some more time. The level which I'll watch on the upside is around 24,740, 750, and then 24,950. And the way to trade the index would be, if you get a mild decline during the session, let's say a 30-40 point kind of a decline from current levels, which is around close to 24,560, 550. That's the time to buy with a 80-90 point kind of a stop loss and try to take profits around 24,750. And then if it goes higher, around 24,900. So we'll trade with a long bias, but on mild declines. And on the stock side also, I think the bias will be more aggressively on the long side.
Okay, we'll come to your stocks. Shrikant, yesterday, quite the V-shaped recovery, but is there more strength in this up move?
Yeah, good morning, Rima. Good morning, Surbi and everyone. Say for Nifty, it is tinkering with the level of 24,450, which is not good because the market has spent nearly 3 months above these levels. Yesterday's V-shaped recovery is definitely encouraging, and we need to keep a stop loss at 24,450 for creating any fresh long position on the market, because markets are deeply oversold and almost all the news flows are out in the market. So now again, we need to see that how actually market performs from here, whether it sustains above the important level or not, because quarterly earnings are also almost over, and news flow related to tariff is also almost known to everyone. Despite all this, market manages to sustain about 24,450, then we can expect rally towards 24,800 sort of levels. But yes, we need to be more and more stock specific in this market. Still, the market is not going far away from the levels of 24,450. And for the day specifically, look for adding long position if there is any lower opening with a stop loss at 24,450.
Okay, all right. Hi, gentlemen. Mitesh, you want to run us through your stock picks for the day?
Morning, Ajay. As I said, I have more of buy calls. So there's a buy call on Jindal Steel and Power with a stop at 988. Look for targets of around 1,040. Blue Star is something which I've recommended a couple of times in the last few days as well. Now is a fresh buy with a stop below 1,800 for a target of 1,885. Also a buy on Maruti with a stop at 12,515 for a short-term target of 12,850. Beyond that, we'll look at a bigger target. And one sell call, that's REC Limited. Keep a stop at 390 half. Look for targets of 372.
Okay, buy Maruti, sell REC. Shrikant, your picks?
See, I would like to go with Cummins India, which has reported decent number yesterday. The stock was into a strong pullback mode. But while looking at its entire setup, I'm of the view that it is going to surpass its previous high of 4,000. So at this level also around 36.75, 3700 level, it looks very strong candidate to buy for with a stop loss at 3625. And we can expect 3,900, 4,000 sort of levels in the near term. The other stock which we like is Indigo, and it is mainly because the stock is consolidating. It is very close to its all-time highest level. Also, if we go through with crude prices, then they are drifting lower. Based on its overall technical formation, I think the stock is heading for at least 6,250 in the near term. We can keep a stop loss somewhere close to 5,900 for the same.
Okay, all right. Thanks a lot for that, gentlemen. Well, let's do a quick question with Siddharth before we let him go. Sid, from the jewelry companies, what do you like?
Yeah, I think we had the numbers from Titan. The blue chip continues to shine. Very strong start to FY26. Consolidated revenue grew 25%. The standalone jewelry business saw a growth of 17%. We also saw strong contribution from other segments. The eyewear segment posted 24%. The eyewear segment posted 13%. Watch segment saw strong growth of 24%. Margins were higher, and I think across segments, overall EBITDA margins expanded 170 basis points due to better mix and also some of the gains. So I think Titan is well positioned to sustain its strong growth, supported by the robust brand equity that it has, continues to do the store expansion, as well as the formalization of the jewelry industry. There has been some hiccups and there is some concerns with regards to the rising gold prices, but I think jewelry in India that continues to shine, and with a strong brand like Titan and a consistent growth that they are able to deliver, we continue to like Titan from a long-term perspective. We have a buy rating with a target price of 4,150, giving more than 20% upside from a one-year perspective.
Siddharth, thank you very much for joining in. In fact, we have the management of Kalyan Jewelers joining in. Strong quarter, more than 30% revenue growth, same-store sales growth of 18%. Kalyana Raman, Executive Director at Kalyan Jewelers, is now joining in. Thank you very much. This is Rima here. Can you sustain this high teens kind of same-store sales growth for the rest of the year? And considering the strong performance, did you gain market share in Q1, and what would it stand at?
Yeah, thank you. So, yeah, revenue growth was good. Q1 revenue growth was 31% consol and in India. PAT also grew by 49% consol and 55% India. SSGs were very strong in the range of 18%. And if you look at the same-store sales growth over the last maybe 6-8 quarters, it has been consistently in double digits, and we don't see anything majorly changing for the SSGs to change drastically. But yes, we are starting from a high base because last year there was a customs duty reduction in Q2, which had a bump in revenue in the last Q2. But we have more number of festive days in Q2 when compared to last year. So we hope that it gets negated partially because of that.
Okay, all right. Hi, Ramesh. Good morning. Good to see you, Win. Congratulations on solid numbers. So put in some numbers then. What kind of growth should we work with for the year? What kind of margins and SSG? If you could tell us the FY26 guidance.
Yeah, so not as a guidance, but yeah, SSGs are strong in Q1, and Q2 also started off very well. But July last week and August first week are not comparable to the last year because we had a huge revenue bump in the last week of July and August onwards because of the customs duty in the cut last year. But markets, walk-ins are vibrant and store expansion is also happening. So we don't see anything which can change the momentum this year.
Market share percentage as a percentage of the organized market? What is your market share?
So yeah, so organized market share is growing every year. You have seen it consistently. So now we are at 7-8% of the organized segment is Kalyan's market share.
7-8%.
Okay, all right. A couple of more factors then besides the operational performance. The promoter entity, a year or so ago, the stock had gone into a bit of a tizzy. You all came in there, showed some faith, bought more than 2% in the company. Do you all intend to increase your stake from these levels? Point number one. And point number two, I recall you all had some land that you all sold and the debt number was supposed to come down. So have you all received the money, and what is the updated debt number?
So debt now we have we have not received any collateral for the amount which we had repaid. Now we have started the paperwork with banks to release the collateral, the land collateral. And When it comes back, then we dilute it again and then repay the loans further. So now, as far as now, we have reduced loan by around 500 crore. And now we have taken a pause because now we are in discussions with the bank to bring back the collateral to us. And once we receive the collateral, then we go to the next stage of reduction of loans again.
So you're talking about
started for the 200 crore worth land from the banks.
So no, you're talking about that the shares that are pledged. Is it you're looking at releasing shares that are pledged, or what is the collateral you're talking about?
No, so first of all, let us separate the company versus the promoter. Promoter pledge has nothing to do with company because it was done only to be a part of the last exit from Warburg. We wanted to increase stake in the company, and Warburg was doing their last block of exit, and we also took part. That was the only area where the promoter pledge was there. That has nothing to do with the company. So company loans we reduced by 500 crore because company have lot of land collaterals which was mortgaged with the banks, which we wanted to take it out because the balance sheet is looking heavy.
So what is the updated net debt in the books then? If you could tell us that. And you had sold that plane, right? 100 crores was to be received. That money has come?
Yeah, that is 2 years before, 1.5 years.
That has come.
Yeah. So that's
an updated net debt number, and where is it headed?
So last year we ended at 1,900 crore debt in India.
Okay. And will that number come down by the end of FY26? What's the number we're looking at?
No, as of now, we have taken a pause because we want this land parcel to come out.
Sure,
Once
got
it
it.
comes out, then we go for further debt reduction.
Got that. Your non-South revenue contribution is now 51%. What is the growth between South and non-South, and what could this revenue contribution inch up to?
So the non-South revenue is growing more than South because our expansion is predominantly in the non-South region. We are into a FOCO model of expansion where it's an asset-light expansion. The majority showrooms are coming outside South India. So the outside South India revenue is growing more than South. But the South SSGs are 18-20%, and it has been consistent over the last 6-8 quarters now.
Okay. And talking about your expansion plans, could you tell us the overall store expansion plan over the next 2 to 3 years in India and Middle East? And if in India, if you could break up in South and non-South.
So again, our plan is to open 90 Kalyan showrooms, which out of which 85 will be in India and 5 or 6 will be in international markets. And out of that 85 in India, maybe 9 or 10 will be in South. That is for this year. And this expansion will continue for the next 2 years, almost in this plan only. And over and above that, we have one more format. It is Candier. It's lightweight jewelry. We will open 80 showrooms in India for that also.
Fantastic growth, Ramesh, and the market is really liking everything that you're saying. The stock in the pre-open itself is up about 4%. So congratulations on a good quarter and good luck for the rest of the year. That's Kalyan Jewelers. Let's pull up the stock. We're getting some interesting, early reactions. That's Kalyan. Kalyan is one. Look at AU Small Finance Bank, by the way, as they get all set to become a universal bank here in India. Stock is rocketing higher, 7% up on AU. Otherwise, the market is quiet. I mean, that's exactly what you'd expect. I mean, the day after digesting that big tariff hit, the expiry factor is also over. So the start is very, very quiet. Let's see. For starters, if the Nifty can protect the 24,500 level, that'll be a good start. We'll get back to our technical experts on that note. Mitesh, 910, what's the call you'll go with?
I'll go with the buy on Blue Start for targets of 1885.
Okay. All right, Mitesh, got that. Thanks very much. By the way, since I was calling out AU right now, and the stock is up 8% now, actually, in the pre-open. Yeah, 7.5%. Let's go back to Gaurav and figure out what are all the benefits that a bank gets by becoming a universal bank, the transition from a SFB to a universal bank. Market is very excited for AU, Gaurav.
Well, definitely, it looks like market is very excited for AU, and there are many reasons for that. Now, AU Small Finance Bank has got a in-principle approval from RBI to become universal bank. Remember, this is the first small finance bank to get such approval, and bank had actually applied for this in September 2024. So it took 11 months for RBI to review and approve AU Small Finance Bank to become universal bank. When it comes to benefit, there are multiples. First is that it will improve the brand's acceptability. It will also help the bank to bring their cost of funds lower, because usually small finance bank, they offer higher deposit cost to attract more deposit. When it comes to the PSL requirements, which is priority sector lending, earlier RBI had pushed the priority sector lending requirement for SFBs to 60% versus 75%, but now for AU Small Finance Bank, it will further come down to 40%. They will also see the capital adequacy ratio requirements bringing down from 15% to 11.5%. There is also going to be increase of avenues in terms of fee income, and also it will aid the customer growth. In fact, the bank was also very optimistic when it comes to growth. They said that until the base reaches around 3 to 4 lakh crores for the loan growth, they will actually sustain 25% growth as they had given earlier. When we talk about brokerages now, they are also being a little bullish on the stock. Goldman Sachs, they have maintained their target price of 979 rupees. They believe that the ROAs can expand somewhere in the range of 10 to 30 basis points. We also have Investec. What they are saying is that with this, there are other benefits as well. First is that this also brings in this also actually eradicates all the doubts around the tenure extension for the current CEO, Mr. Sanjay Agrawal, and this also pushes the potential book value per share accretive fundraising for the bank. When it comes to other brokerages, they are also being bullish. They believe that ROEs can increase somewhere in the range of 300 to 400 basis points in the next 3 to 4 years. So definitely a positive move for AU Small Finance Bank, and we are also seeing this reflecting in the stock price.
Okay, all right, Gaurav, got it. Thanks very much. Let's bring Mitesh back in. Mitesh, very quickly, levels on AU and any of the jewelry stocks, anything looks interesting? Because most, including Titan, Kalyan, most have reported pretty good numbers.
EU Bank is definitely a trend. It's done a good correction. It's now at weekly support levels. And in the last 2.5, 3 weeks, we have time and again seen the stock bounce back from levels of 720. That being the base, the reversal happens about 756, and I'm then looking at 780 kind of a target. So I think it's definitely heading higher. I don't know how much the opening gap is, but yeah, I think the setup is definitely on the positive side. And on the jewelry stocks, Kalyan Jewelers could be interesting. Again, a stock which rallied to 615, came down to 570, appears to have completed one leg of a correction. I think the stock could bounce back to 610, 615 again. And if it crosses that, then we'll look at further.
Okay, that's a photo finish. The bell goes off. Let's take a look at how we're starting this Friday morning. Starting a little cautious, 30 points lower, 27 points lower. But like I said, it's not too bad, considering the market defended critical levels yesterday thanks to that short covering bounce. The Bank Nifty is already flashing a little bit of green. The mid-cap index is very quiet at this point, 0.2% lower. The Nifty is just, around that pivot, 30 to 35 points lower. That's what we have. Let's get the stocks board up just to get an at-a-glance view. It's still more declining stocks than rising stocks. I mean, that's something you have to give. But it's not too bad. Bharti Airtel is the one in focus. Rima has been telling us about the prospects of a large trade that we're expecting, in which perhaps the promoters are going to offload some equity. That stock's down about 2%. There's some more weakness in banks and IT. Titan's looking good, 1% higher. But Rima, I think Bharti Airtel is the stock of the morning, as that, we're seeing it happen now. 1% equity exchange, stocks lower about 3%.
It's a large size, right? Like 9,000 crore plus in terms of the total exchange. And that's weighing on the stock. And as I said, this is the third consecutive time, the third time that they've done in about 1.5 years. So who knows if more is coming. But that's Bharti Airtel. That's the top loser. Other losers include HDFC Bank. So that's dragging the banking pack overall. Axis Bank is open in the red. Eternal has a cut of about 1%. Hindalco, Sun Pharma, Shriram Finance are a couple of the other heavyweights with a red tick. On the way up, you've got green on the screen for Tata Motors and Hero MotoCorp. Bajaj Finance is open with strength. Trent has reversed some of yesterday's losses. Nestle is higher in trade. But it's still very, very quiet. I think all the action is in individual stocks, where an AU, LIC, Max Financial, Nigel, these are the ones all reacting.
Well, that's right. Actually, AU Small Finance, from the first tick, it's seen a sharp downtick, actually. It's up only around 3% or thereabouts right now. The news is positive, but there is some selling from the top. As is the case with Kalyan Jewelers, it was up more than 3% in pre-open. That is up only 1% right now. So some of those good numbers, they opened in the green, but they've come off a little bit. A good news flow as well with regard to AU Small Finance Bank. Best Agro, that's one stock that's lower, much lower, with a sharp cut from the broader market. So just keep an eye out on that one, BEST Agro. We have Kitex as well that's selling off. So a big downtick on both those two names. Not sure what's gone on there. But on the flip side, you've got some, I think, favorable reactions as well. You have KRBL, stock is moving higher on very, very large volumes. So just pull up that stock out there. Good move is what we are seeing. LIC as well is doing quite well. You should pull up that stock as well. LIC, KRBL is flying away. That's up close to 10%. LIC, one of those underperformers post its IPO. That one as well has found its way back. And you have Kalpataru Projects. That stock, in fact, is doing well, up more than 5%. But GSFC, that's another one that's moving higher on very, very large volumes. So keep an eye out on that name as well. So the market's a little bit lower. Can we take out the yesterday's high is going to be important. Comes in at around 24,635 ballpark.
Absolutely. I've got some more stocks, just spotting them on the screen right now. Look at Coforge.
Yeah.
Pretty weak start for Coforge, almost 4% lower. We'll dig a little deeper into this. There's Page Industries that reported numbers yesterday. Not getting the kind of follow-through, 3% lower on Page. Data Patterns is yet another company which has a defense linkage, which has reported, a weak quarter, actually really weak. Data Pattern, the revenue is down some 75%. Margins have fallen about 500 odd basis points. Stocks down 5%. So that's what we are getting. There's some selling in Shakti Pumps. It had rallied, of course, earlier. But today it's opened down. Bharti, even Hexacom is lower, actually, not just Bharti Airtel. Hexacom is also down. Blue Star is losing some more ground, 2% lower. So these are stocks on the lower side. But then on the flip side, PVR Inox, I'm not sure if we have an interesting release today or not, but a nice Friday flavor with PVR Inox, 4% up on that stock. Yeah, looking good this Friday morning. That's PVR. What else? There's Ujjivan Small Finance Bank. Some of the smaller financial names, watch for them. There's a AU rub-off effect as the market, picks up hope that maybe the others will eventually also get their universal bank licenses. So Ujjivan is an interesting one to look at. From the insurance space, GIC, the reinsurer, 6% up on GIC. So on the heels of LIC itself is up 4.5%, GIC is up 5.5%, and even Max Financial, 3.5% higher. So yeah, some up, some down, but net index level, we don't have too much action this morning.
Max Financial also came out with their numbers. So that's, one of the factors behind the stock that's up close to about 3.5%. Vishal Mega Mart, one of the stocks which is going to get impacted by MSCI, that has opened with a cut of about 1.25%. Biocon, numbers have missed expectations. Generics was weak. The generics growth was just about 5.5% on a year-on-year basis, lower than estimates, and that stock has taken a bit of a knock. One of the new listings, Sri Lotus Developers, it had a blockbuster listing, but today it's given up some of those gains, and stock is down close to about 0.5%. KRBL is an earnings reaction. Kalpataru Project is an earnings reaction. These two stocks are moving up on very, very large volumes.
I think NSDL, Rima, talking about new listing, just take a look at that. First day it was up 10%. Some were disappointed. Then yesterday it had a 20% move, and today it's up another 10%. So, for the time being, at least those that had bought in the pre-IPO that were very, very nervous about it, I think they'll still be locked in. But, the stock is up 10%. So, in this, from the listing price, I think it's up, 50%, I think so.
800 was the issue price.
Right?
800 was the issue price, 41% subscription. But just the kind of money, right?
Yeah.
DIIs yesterday bought more than 10,000 crore rupees. And these are large IPOs. JSW Cement is open.
Yes.
Knowledge Realty Trust got the highest ever subscription for a REIT. NSDL saw such strong subscription.
Yes.
And yet, when primary market is sucking out so much money with oversubscription for large issues, even then for the secondary market, you still have a buy figure of 10,000 crores. That's the power of retail.
I'll tell you what, let's get to a couple of those big numbers. LIC is buzzing on good earnings. Vamakshi joins us to help us recap those numbers. Vama.
Well, absolutely, Nigel. A fabulous set of numbers coming in from LIC, and you're seeing how the stock is reacting in trade today, up almost 4.5%. The new business premium was up almost 5% at 60,262 crores. This has come in higher than what the street was anticipating. Apart from that, when we look at the total APE, which is the annualized premium equivalent, that too saw an uptick of almost 2% this time around. It's a slight miss, but nevertheless, it has come in at 12,652 crores, and this growth is largely being driven by the retail APE, which again has come in better than what we were penciling in. Now, the value of new business, which is the VNB, also saw a good uptick of almost 21%. This has come in higher than what we were expecting, and that bodes well for the company, because the VNB margin as well seeing an improvement of around 150 basis points. The VNB margin now stands at 15.37% and has come in higher than what we were expecting. So overall, a good set of numbers coming in from LIC, the stock reacting to those as well.
Absolutely, it is. It's surging away 4.5% this morning. Thank you, Vamakshi, for joining in with that quick recap of the LIC numbers. Let's bring in our market master of the morning, Krishna Sangvi, CIO Equities at Mahindra Manulife Investments, is with us. Krishna, great to have you on. Thanks for joining in. So many headlines, so many moving parts, geopolitics, tariffs and whatnot to digest. And then, of course, earnings. Not easy to make money in this market anymore, right? So what's your recipe or what's your, what's your formulation for making money for the rest of the year? Because it's down to very, very specific stocks now.
Yeah, I agree. It's stock specific, but I think the broad recipe is simple. Can we avoid the noise and look at, next 18 months, 24 months, which is typically the investment time frame we look for companies. And to that extent, once you go ahead, some of this noise possibly will come down. Economy keeps on, its own track, which is a reasonable growth rate in the current atmosphere. 6.5, honestly, is not something we should be, worried about. It's a nice growth in the overall context of the world. So that's a real recipe. Keep your time frame right, which is essentially, maybe 18 months, maybe 24 months from now, when some of this noise will go away, earnings will keep on coming. Noise are maybe detracting the valuations right now. So hopefully the combination of earnings and multiples will support the investment hypothesis.
Looking inwards, and we've been seeing this K-shaped recovery for a while now, Krishna. So what are the subsectors within consumer discretionary or staples which look attractive to you over the next 12 to 24 months?
Yeah, this K-shape clearly has supported higher end consumption, within which, something like travel and leisure can be one, nice spot, maybe upper end, discretionary products, maybe durables, maybe automobiles. I think those are, the typical beneficiary of high-end consumption, and we do believe that stays good. At the same time, let's look at the other side of K-shape. We believe things have improved substantially over last 12 months into that segment of economy, and going ahead, even we expect something like staples also to do reasonably better vis-a-vis their own last 12-18 months history on business performance front, because staples is a place where now the rural economy is picked up far better than what it was 1 year back. So something like that is going to help consumption pattern even in the other side of K-curve.
All right, just hold on to that thought. Now, just keep an eye on Divi's Laboratory. The stock is lower. Overnight we had Eli Lilly's experimental oral weight loss drug. Out there, the average loss was around 12.7%, which is a little lower than the 15%. Now, the street believed that, if this drug did well, it would be a potential opportunity for Divi's in the time to come. So, may not be as big as what was estimated. So, I think that's why a bit of a sentimental knockback with regard to this stock, because of Eli Lilly's oral weight loss drug wasn't, as successful as what earlier expected. So let's see how that goes. And the other one is Ramco Cements. The numbers were there a little bit disappointing, and the stock has already had a good run. Volume degrowth higher than expected. That's why that stock is under some pressure in today's trade. But let's get back to our chat with Krishna. Krishna, I wanted to ask you about the real estate space. We were just highlighting some IPOs. And in Lotus, I saw that y'all were one of the anchor investors. What is your view on real estate here in Mumbai? And if you want to talk about the rationale behind this one, it had a phenomenal listing.
Yeah, let's look at real estate. And if I go back to the previous question, that's clearly one more name on the discretionary consumption space, especially higher end. So real estate is one more discretionary space, and yeah, we do own quite a few stocks across, in terms of real estate there.
What else do you like, Krishna? Are you seeing value anywhere?
Value in the current market, honestly, is slightly challenging. It's not that it's not there. It's just that, there are certain pockets which are value, unfortunately, not able to spot a catalyst for a quick, realization or monetizing that value. That's where the idea is, again, to keep slightly more longer term focus. That 18-month, honestly, to my mind, is right time frame. Let's face it, markets are pretty much at same level for last maybe 12 months or, this roughly 25,000 Nifty is what we were a year back. Today we are So in a way, value is emerging partly from time correction. At the same time, we need little bit more earning support, and that's where value I think is little bit one has to wait for that value to be monetized rather than upfront. Other side of the market clearly slightly more momentum, which is also it's one more way the market plays out right now.
Okay, I just wanted to clear that point. In real estate, you're positive, right? I mean, when I asked you about Lotus and the money you'll put there, real estate is one of the sectors you're positive on?
Yeah. As I said, real estate is one of those discretionary, K-shaped beneficiary of India is earning more, Indians are spending more. It's maybe combination of lifestyle as well as earning growth combination.
Okay, all right, Krishna. Appreciate you stopping by and giving us those, your take on the markets. For the time being, the markets have moved to the low point of the day. We're down close to 60 points. Till yesterday's close protected, I don't think the street will be too worried about. But I'll tell you what, a couple of these good numbers are getting sold into. And Kalyan Jewelers, just take a look at that stock. It's corrected close to 8% from the high point of the day. AU Small Finance Bank, very, very good news coming in there. But from the highs of the day, the stock is up less than 2% the last time I
But
checked.
NSDL has gotten stronger.
Yes.
I think it was up 10% when you spotted, now up 15%.
Yeah, I think that the float factor as well will play a role out there because, those that took in the pre-IPO, I don't think they can sell, and the float as is will be limited. But that's a 50% return from its IPO price.
BSE has also slipped, by the way.
All the good earnings.
All the good, where it wasn't a blockbuster, but good numbers.
Yeah. But it also tells you something about the market's mood and overall sentiment, right? Till this is resolved, this whole 50% business. Because wherever there is a pop, people are rushing in today to take profits. That's the psyche of the market. Look at the mid-cap index. It started with a small positive flash, but now the mid-cap index itself is down about 0.4%. Nifty is at the morning lows as well. So, yeah, it's still weighing on sentiment till we have some more clarity.
All right, let's focus on Uno Minda. We have Sunil Bora, the group CFO of the company, who joins us on the show. Hi, Sunil. Good morning. Good to have you as always. Before we get to your numbers, let's talk about the crucial issues. Trump's tariffs, how are they impacting business? Have you got some feedback from customers? I think 11% of your total mix comes in from international market. How much of it is from the United States? And have you received feedback from your customers?
Absolutely. So in terms of the exposure to US of our total revenues, it is less than 2% as we speak. So definitely it's not a significant quantum if we look at the top line perspective. And also you asked in terms of customer feedback. So definitely customers so far have been very positive in terms of the total revenues. In fact, our sales in the last quarter has actually been better than what they were. And we are all, I think, in the wait and watch mode as to how things will eventually pan out, because the businesses cycle we are in, it is, auto industry is something where when you have to get into a business, it's a long cycle. And I'm sure at the same time when you have to sort of replace your suppliers. So it's not something which you can switch on and switch off overnight, because there's a long time to develop the product and then get into a new model launch, and then you are part of that entire life cycle. So from that perspective, I think from auto perspective, specifically from tier 1 perspective, it's very difficult to say what will be the immediate impact. As I said, it's a long cycle.
Yeah, but Sunil, having said that, can you just tell us right now, exports as a percentage of your total top line annual revenue, what would that number be?
Yeah, so that's what you just said. It is roughly around 11%. And when you say
11%,
it is export plus our international revenues. So we have some assembly operations or manufacturing operations outside of India. So as an overall pie, it is roughly around 11% of our...
11%, got it. So now, given that there are, big shifts happening, supply chains seem to be realigning because, and for us, maybe there's still a negotiation on, and we'll see if we settle at 25% tariff. But it seems that 15% between the EU and US, etc., those things seem to be fairly settled. And the ASEAN tariffs, they seem to have settled. There's no further negotiation there. So because of all of this, can you give us some more perspective on what you're expecting from your overall international business, exports plus international? Are you getting more inquiries? Will you have to make any kind of shifts in terms of, the areas you're manufacturing at?
No, absolutely. Actually, our exports are actually doing, if you see in absolute terms, doing much better than what they were on a year-to-year or quarter-to-quarter basis. In fact, at ASEAN, if you remember, last year we commissioned a new plant in Vietnam. As we speak, there is a new plant under construction in Indonesia. So our ASEAN business is actually doing pretty well. Europe business is stable, and there are some exports which are happening from India is to Europe, ASEAN, and to US. And as I said, US is definitely it's a very small number, and there is not much of export from other geographies to US. So from that perspective, we are quite insulated.
It's not a big impact, 2%, but you still don't want to lose 2% also, right, Sunil, of your overall revenue?
That's what I said. So as I said, as of now, our numbers are actually looking better than what they were. And when you see auto tier one, it is not something which I'm maybe repeating, switch on, switch off to one supplier to other supplier. It's a long cycle. So even if the customers, for a moment, if we think has to maybe look for some other source, it's a long cycle. And today things are so volatile.
Assuming you have the order, Sunil, there could be some margin pressure. It's ultimately a very large tariff burden to be shared by one entity. To be taken up by one entity, it will have to be shared. So in that context, do you see any kind of margin pressure? Because your reported margins, ex-incentive, was also about 10.7%, not close to the 12% that you reported.
Yeah. So as I said, it's little early to comment on the cost pressures. Our numbers are actually better. And to whatever indications we have, our customers as of now have not even sort of came up and said, how can we sort of share this? So because I think they are also in the process of digesting the impact and how this can be sort of panned forward. And they will, I'm sure, also look at other options. So it is not that only India is impacted. There are other geographies also. There is a tariff. Yes, there might be a differential, which we all know will kick in from 27th of August. But still, I think there is some optimism that something might come out of this discussion.
Okay. What is your content per vehicle for ICE? Last time it was 12,000. What is the number in Q1?
No, for ICE, if you are referring to a PV or a two-wheeler.
Two-wheeler.
So two-wheeler is ICE content is same. We have not added any significant number. So we disclose the numbers on annual basis. So the number which we declared in the last quarter remains the same.
Got it.
Let's talk overall growth and margins as well, Sunil. So in the first quarter, you've done about 16% consolidated top-line growth. Margin is at about 10.7%. What's the outlook in terms of how pricing is moving in the domestic market and, of course, raw material and costs, etc.? What can you tell us about the future of margins for the rest of the year?
Yeah, absolutely. So as we have guided, our annual margin range guidance is roughly 11% plus minus 50 basis points. And we are within that guidance range on an annual basis. So quarter to quarter is very difficult to comment on. That's why we give a annual margin, because normally whatever price discussions, etc., are happening with the customers, normally they get close towards Q3 and Q4. And that's why if we see our trend for many years, normally Q3, Q4 tend to be a little better than Q1, Q2. And that's why on an annualized basis, it is 11% plus minus 50 basis points. In terms of cost pressures, as you know that large part of our commodity businesses, commodity cost is actually passed through to our customers. It's upcycle also is shared with the customers, and even downcycle we don't tend to gain anything. So from that perspective, we have tried to insulate the business as much as possible from the commodity price volatility.
And what can you tell us about revenue visibility, considering you're saying, I mean, your international business is absolutely not impacted by what's going on. So that's pretty steady. What about the growth in the India business? So total top-line visibility, can you share some sort of a guidance for us for the full year?
Yeah, so absolutely. As you would have seen in past also, we have been very clear. We never give a headline number in terms of revenue, because we are completely dependent on our customers. So we have been consistently saying whatever market grows, we grow at least 1.5 times of the market growth. And if you see even the last quarter, the large part of the business, which is our 92% of the business from two-wheeler and pass car segment, which has grown 3% and 1%. On average, 2% is the industry volume growth, whereas our growth, as you just said, is roughly around 16%. So that clearly demonstrates the outperformance. And if you plot that for past many quarters, many years, I think we've been consistently outperforming the industry growth, and we're quite optimistic we should be able to continue that in the near future as well.
Okay, all right, Sunil, we'll leave it on that note. Thank you for joining in today. Good luck for the rest of the year. And we look forward to more conversations in the future. I have to take a quick break. The market, Nifty is down about 80 points as we speak. The mid-cap index is down about 0.4%. We have an eye on the screen, but after the break, we come back and get chatting with the management of Titan. Mr. Ashok Sonthalia will join in. Welcome back. Well, we're looking at the market, which was a little subdued this Friday morning, but we've got plenty of earnings to go over. And another good set that came in was from actually Titan. In fact, if we talk about the Q1 performance, it was a pretty decent quarter. Margins have been looking stellar. And the watch business is also growing. In fact, if you talk about the overall revenue, then an increase of about 21%. EBITDA margins at 34.8% coming in, improvement in the gross margins as well. We have Mr. Ashok Sonthalia, Chief Financial Officer at the company, joining in to take a couple of questions. Mr. Sonthalia, thank you so much for joining in. So, first things first, let's get, your pulse check. Now that we're entering festive season, we were just discussing this, right? It starts off with Raksha Bandhan, then Ganesh Chaturthi, and then the full-blown season. What's your sense of demand, sir? I mean, let's talk pure jewelry business. What are you gearing up for as we enter the festive phase?
Of course, Surabhi, we are quite excited and looking forward to it, but we cannot ignore the kind of volatility which gold prices are exhibiting, and if you have picked up today's news again, that the whole global supply chain from Swiss to US has been, so every day there is a new thing, happening, and which keeps buyer growth for gold jewelry under check. They are quite flattish. And that's a little bit concerning for us, that while we are doing everything to experiment with 18 karat, 14 karat, and carat lane, even doing 9 karat gold to keep the price point for end consumer more affordable. But this volatility has to stabilize, because any volatile environment keeps consumer sentiment.
No, sir, could you complete that point? Are you saying that demand is subdued so far in the second quarter? Are you expecting it to be a slightly more subdued season then because of the volatility? And you're saying you're doing everything. You're experimenting with even 14 karat, etc. But are those experiments working?
So of course, through the price point and ticket size, we are able to deliver growth. And on that, we don't have doubt. We would, of course, like buyer number also to grow, which is not happening, which is happening in the studded. And July month, because we had our festival diamond festival started early. So July month has been doing well as far as diamond jewelries are concerned. And to that extent, gold is still finding favor from the investment point of view and adornment point of view. But buyer growth is muted at this point.
So if I ask you, like to like, as we get into, because Q3, there's no point saying Q3 or Q2 because the season keeps moving. Yeah. As of now, the visibility that you have, like to like, festive season to festive season, how much growth are you expecting? 15, 20, less, more? We're just trying to get some sense.
Mid-teen seems to be okay. It can be slightly better. We don't know yet. But we think mid-teen should definitely be possible.
Mid-teens, okay. What about margins? You expanded your jewelry margins to 11.5%. What led to that? And going ahead, given all that we spoke about in terms of uncertainty, what is the expectation on how margins will play out? Because even the buyer growth in gold, you said, has been a bit subdued.
Yeah, so margin performance had one-time benefit in quarter one. We called out 50 basis point, which will reverse itself in quarter two and quarter three. But as far as overall margin is concerned, our guidance on jewelry domestic business has been 11 to 11.5 for Titan standalone basis. And that guidance we are still maintaining. But at the same time, I must point out that growth, market share gain, customer acquisition is at this point of time highest priority. And for that, if some tactical call have to be taken, we would not hesitate in taking that. And if that means that margins slightly go, instead of 11, 10.8, that's okay.
So there could be a downward bias to your margins. Your guidance is, aspiration is 11 to 11.5%, but given the focus
has to be taken, we will take some calls because growth is far more important at this point.
Okay. So focus on growth over margins.
All right, Mrs. Sonthalia, hi, good to have you, Ben. Tell us about the acquisition of Damas. You'll have done 67%, I think, for a value of around 2,400 crores. The last year did close to around 3,400 crores of revenues. What is the scaling up of this business? Say in the next 2-3 years, where do you see this revenue number headed? Point number one. And when you purchase the remaining 33% stake, at what valuation will it be at?
Okay, so the 67%, yes, we have purchased, and we are kind of repivoting the brand to more Arab customer-focused brand. Right now, it has both Arab as well as Southeast Asian, Indian, and kind of so that repivoting, Nigel, for next 12 to 18 months, some restructuring of the network, etc. Will kind of after that this should grow. Currently, they have high single-digit to low double-digit growth rate in the past. But next 12 months, I see some readjustment happening. But beyond that, double-digit growth should come. UAE as a territory is doing pretty well. Saudi Arabia, where a lot of social reforms and economic developments are happening, that's the another important market for the mass to grow. Yes. And we believe double-digit growth should be coming. As far as next 33% after 4 years is concerned, it's a profitability-linked complex formula, will completely depend on performance. So at this point of time, very difficult to kind of put a number to it.
What EBITDA does it do?
Right now, it is just low single-digit number, just has positive territory. That's it.
Okay, and obviously you'll be looking at scaling it, as you grow in this double digits, you'll have an aspiration to take the margin to double digit?
Certainly high single digit to low double digit. It's some work has to be done, Nigel, and I think we have a lot of synergy on the sourcing, merchandising, retail operations. So in a combined ecosystem between Tanishq and Damas, we see a lot of value accretion possibility.
Next 3 years, Damas could be nearly 5,000 crores of revenues with high single-digit margin. That could be the aspiration, right?
Okay. Yeah, we have not yet finally penned that down, but that seems to be very reasonable.
So your watches division margins were quite high this time, 22%. But I believe there is some one-off inventory gain. What are the adjusted margins? And do you think you can, you're given a guidance, I think, of 18 to 20% on margins for watches. Does that stay, or do you think you can push it higher?
So adjusted margin for Q1 for watches is about 18%. 400 basis point one-timer is there. We had guided about 12.5 to 14.5, Sonia, if you remember. But we think that FY26 will be slightly better than that, maybe mid-teen. Because again, this 4% will reverse in Q2, Q3, and Q4. Because when this inventory gets consumed for sales, this kind of will hit P&L. But it's not a very, very large number. So we still mid-teen EBITDA number from watch division is certainly possible.
Okay. All right. So we'll leave it on that note for today. Thank you so much for joining in and giving us some perspective on the business. And we look forward to more conversations down the line. Well, on that note, let's quickly do a check on the market. And the market is turning for the worse now. 24,500 is in question. Let's see. We need to see if we can protect, of course, yesterday's lows. Right now, it's a 100-point cut on the Nifty. And the mid-cap index is also down about 0.6%. So the color seems to be red this Friday morning. Rima.
All right, let's move on. We've got lots of companies to chat with. So Metro Brands, they reported a steady quarterly performance this time. Nissan Joseph, CEO at Metro Brands, is now with us on the show. Thank you very much for joining in. You've clocked in about a 9% kind of a top-line growth in the current quarter. You'd spoken, the aspiration, sir, has always been sort of a 15% revenue CAGR over the medium to long term. For FY26, what kind of growth can we expect? And how is the consumer sentiment and the same store sales growth for you?
Yeah, I think, good morning and thanks for having me. I think as we look forward, we see the quarter starting to maintain the momentum and maybe build a little bit towards the back end. But I think what's important to note here is if you go back to the pre-COVID quarter of 2019, we were up 101% over that quarter, and that is a 12% CAGR if you look at that period of time. And I'm also including the COVID year in this. If you pull that out, it's definitely coming into our guidance of 15%, the mid-teen range. And I feel confident that, whether it's this quarter or next quarter, we will start getting back to that 15% gain.
Okay, so you should build on the momentum and get to 15% kind of a revenue growth. I'm presuming that's the festive season push also. So Q2, Q3 should see a 15% revenue run rate?
No, that's not what I said. I said, we will get back to that 15% CAGR growth. But we remain quite confident about what's happening with the economy, what's happening with our business. We've had 2 quarters where we've had almost double-digit growth. In an environment that hasn't been the same for a lot of our peers. So I think we'll continue that momentum trend and we'll start building back towards it.
All right. And the long-term margin guidance of around 30%, you can hold on to that mark?
I think we've always guided to a long-term CAGR of 15%, Nigel, and that's something we're very comfortable with.
Now, on the margin parameters, what I'm asking you.
On the profit margins, we've guided to mid-teens on the PAT margins, and last quarter's a good example of that. We were well into the mid-teens in profit margins, and that's a guidance that we're very comfortable with in the long term. Would it go a little bit left and a little bit right as we make investments into new businesses, into marketing initiatives, into people investments? That it might do a little bit, but overall, that's what we have guided to.
How many stores are you planning to add, sir, in FY26?
So last quarter, we added 23 new stores, though we closed 3 stores. And we're starting to see momentum build up on the new store front. And we're pretty confident that we'll get back to a decent run rate. I think what's exciting in there, though, is that last quarter, we opened 4 Walkway stores. And, it's a chain that we haven't been doubling down on a lot. The previous year, in the full year, we only opened 4 Walkway stores, whereas in the last quarter, we opened 4. So we've already matched what we've done the year before. And we intend to quite grow that channel quite well as well, on top of our Metro Mochi and our Crocs. And of course, we now have the Foot Locker chain and soon to come Clarks.
Okay, all right. Give us a few more details. When does Fila break even?
Fila is breaking even. We've gone through the cleanup phase of Fila. We're now in the repositioning phase of Fila. And the only reason it may not is, we're going to distort quite a bit of our marketing investments into Fila, as you have to when you reposition a brand. It's not a cheap exercise, but it has long-term benefits to it. So, Fila, if I pulled out the marketing spends that we plan on doing, is definitely a break even already. Now, the question is, how much of the marketing spend do we do and when do you get it? And there's always a little bit of a lag, Nigel, between when you spend and when you get. So we're quite comfortable with that. And that's what I alluded to earlier. You might see our profit margin blip this way or that way, left or right of the mid-teen mark, but it would only be because we're starting to, make investments into technology or people, or more importantly, into marketing.
Interesting. Let's, Fila, we'll keep an eye on that journey. But Fila, Foot Locker, New Era, they're still small, right, in your scheme of things. What do they contribute right now? And where do you see that number headed?
So, as you said, they're very low single-digit contribution if you add them all up together today. However, when we look to the future and we see what's happening in the athletic space, when we see what's happening in the casualization space, the athleisure space, we feel pretty good about all those 3 businesses being a substantial part of our revenue as they grow, albeit it'll come in stages. It's not going to be an overnight thing happening because we don't intend to slow down the other businesses as well, right? It's not like we're stopping everything else and we're growing this. We plan on growing everything quite aggressively and quite equally.
Okay. Correct me if I'm wrong, but I think your quarterly sales per square foot has declined in Q1 by nearly 3%.
Yep, that's absolutely correct. And what you're going to see is that number is also going to blip. So, for example, the more Walkway stores we open, that number is not as strong in the Walkway chain as it is in a Metro chain or a Crocs Street chain. It is really more a reflection of the mix of stores that we have as opposed to, the actual sales per square foot. If you look at the top line numbers, we have been growing, so that is not a major concern on our part. But that's a number that is going to seem a little erratic from time to time, simply because it's heavily weighted towards what the stores do in terms of new stores opening and which one of our chains is having which one of our banners is having a little bit more of a accelerated growth versus the others.
So does that mean that your top-line growth is largely going to be driven by an increase in the retail store addition that you do?
No.
Is that going to be the driver of growth?
I think we have a 3-pronged strategy for growth. One, of course, is same-store sales growth. And as you know, the same-store sales growth for all of our industry has been a little challenging these last 2 quarters. But I must tell you, though, don't forget, we've had a 15% CAGR growth, even with last quarter's number, over since COVID. It was 12, but if you pull out the COVID year, it'd be closer to 15, right? So it's not like, and that 15 would have an element of same-store growth in there. So it's not just new stores. So it is same-store sales growth, it is new stores, and it's of course new banners as well.
Always a pleasure having you on the show, sir. And your first quarter, what was important was also your e-commerce business did return to the growth path. Thanks a lot for joining in. We'll track you on some of these numbers. Well, let's get back to the markets. The Nifty has moved to the low point of the day. Mitesh Thakkar is back with us. Mitesh, is this the breakdown, or would you be brave enough and say we held yesterday's low? So maybe, in fact, go in there, buy it and put a 100-point stop loss. Or do you think we're going to break down?
Nigel, initially the idea was that I was looking to buy a 30-40 point kind of a dip, but then there was no recovery happening. And we are back to this weekly average of around 24,420-25 zones. So maybe around those levels, you would want to take a long with a 50-odd point kind of a stop. I believe that that's an important level. Good chance that we could see some kind of a bounce back from there. And on the stock side, I have a buy on LIC India with a stop at 902 for targets of around 945 to about 950. While on the selling side is Nykaa with a stop at about 209.5 and a target of 200 is what I would look for.
BSE, Mitesh, is there any trade on BSE? Stock has slipped about 4% from highs, and this is despite seemingly good numbers.
Yeah. So there were two things. One, I think, BSE I'm watching very closely. On the last two occasions, if you look at the 2-hourly, 3-hourly charts, the stock made a closing bottom around this 2370 mark. So if it starts breaking below 2370, 2360 zones, good chance that we will see this decline kind of accelerate and head towards levels of around 2175. So my advice to traders, if it breaks 2360, take a 35-point kind of a stop loss and play for another about 150, 160 points.
Kalyan Jewelers, the fall is uncanny. Look at it, 7.5% down on Kalyan Jewelers on numbers that seemed optically very good, 30% plus top-line growth. Margins inching a couple of basis points higher. And that's what the stock has done. Total reversal from the opening. Mitesh, we discussed this stock. And at least in terms of the chart structure, at that point, you were saying it was looking good. But now something's gone off. Just a quick level check again and what people should be doing, those who are holding long.
So in the morning, I said 610, 615 is the earlier high. And we could see the stock head towards that. In fact, opened around 615. And then from there has been a clear case of profit booking. It's broken a key support around these levels of 575, 570 zones. So if you are stuck, if you get a pullback to about 570, exit. Otherwise, I believe that with this kind of a candle which is forming today, this could suggest a retest of levels of around 520 to about 510, which is where the stock had bottomed out in June.
Okay. Got that. Thank you very much for that, Mitesh. We'll reconnect. Let's move on and talk about State Bank of India. We'll be reporting numbers today, big one. Gaurav joins in with the key expectations. Gaurav.
Well, yes, when we talk about State Bank of India, now loan book growth is expected to be in the range of around 12% on a year-on-year basis, while deposit growth may remain somewhere in the range of 10%. So definitely there are expectations that State Bank of India will actually outpace the system level growth. And as a result, when we talk about net interest income, we may see an increase of around just 1% on a year-on-year basis. And we may see a little bit of decline on a sequential basis because of the pressure on cost of funds now that repo rates have been cut down. When it comes to operating profit, we may see an increase of around 3% on a year-on-year basis because operating expenses are likely to remain muted. But as a result, when we talk about profit, we may see a decline of around 2% because credit costs that may inch up a little. When we talk about net interest margins, 10 basis point of fall is what the street is expecting in this quarter because of the rate cut impact. And for credit costs also, they're expecting credit costs to actually normalize somewhere in the range of 0.5%. And this is because when we look at Q1 specifically, it is usually weaker for agri segment. Talking about the other aspects, we will be watching out on how the commentary is going to be on net interest margins because earlier management had said that they will be trying to keep net interest margins in the range of 3%. Other than that, any kind of commentary on the loan book growth is also going to be a key thing to watch out for. And any commentary on the asset quality is also something that we will be watching out on. Although the earnings season is almost over, it is very crucial as how SBI sees asset quality spanning across because it is the largest bank of India. So definitely these comments will be important. But for now, numbers are expected to be muted in this quarter on a year-on-year basis.
Okay, all right. Thanks a lot for that, Gaurav. We'll keep an eye out on that set of numbers. Well, for the markets, We are holding onto that cutoff around 110 points. The Nifty Bank is well 150 points lower. The breadth of the market isn't as bad, actually. You still have close to 1,000 stocks that are advancing. Well, let's focus on Crompton now. They reported a weakish set of numbers in the first quarter. Revenue growth was impacted by weak performance in ECD segment. We're joined by Kalyan Swaran Arunachalam, the Group CFO and Head of Strategy at Crompton. Hi, sir. Good morning. Good to see you in. Well, the first quarter was a little bit subdued, but are there signs of green shoots coming back now? We're close to halfway into the second quarter. Obviously, the second half of the second quarter should be far better because it'll be pre-festive. But are there signs that demand is improving and you'll return back to your growth ways?
Hey, hi. Even before looking at the second quarter, I also want to throw some color on how did the first quarter go. It's important to note that we are a company that relies on season, on categories like table, pedestal, wall fans, and on air coolers. These categories had a very weak summer due to unseasonal rains that we had to go through. That led to drop in the business of these categories. But what is very exciting is that categories that are not impacted by that, our growth rate continues to be excellent. We doubled our solar pumps business, our small domestic appliances, which we have been consistently talking about in the last few years, continues to grow at the rate of 18-20%. We are also seeing our categories which we wanted to revive the growth, whether it is lighting or butterfly, is back on track with both growth and margin improvement coming in. All in all, we see that the business is moving in the right trajectory. It's also important to equate this with market share. We have seen, in spite of impact due to unseasonal rains, market share in our core categories have also gone up, which means that the direction is right. We know that we are set for a good full year, and we can already see the momentum picking up for festive in kitchen categories already, with very strong growth coming through.
So that's the important aspect. Kalyan, thank you for joining us this morning. So yeah, let's put Q1 behind us. I think it was an industry-wide phenomenon. Everybody faced that pressure of the unseasonal rains. But now this is a huge business for you. I mean, it's over 1,500 crores of revenue, your electrical and consumer durables business. So what visibility do you have on the growth, on the pickup? Since the first quarter has been so bad, will the full year be flat in best case, or are you hopeful for at least some sort of a maybe single digit, if not double digit growth this year?
No, I think we are anticipating a growth in the full year, and we are holding on to our full year numbers at this point of time. The thought process is that while there are few categories that got impacted, the growth momentum in other categories is really, really good. And that should help us to recover and get back to the growth trajectory. And the anticipation is to end the year very strong and go back to a similar growth rates of last 2 years.
So what does that mean? I mean, in terms of, you could just remind us of the last 2 years of growth. And you're talking about particularly the ECD category or overall top line growth? And what can we work with?
ECD. We are expecting ECD to get back to a double-digit growth. And that's what we are looking at this point of time.
And what happens to margins for this business? Again, I'm repeating for the benefit of our viewers, ECDs, electricals and consumer durables, that is the lion's share of the business for Crompton. The margins for this segment and pricing as we get into festive season, what can you sort of guide us towards?
See, interestingly, even in Q1, if you look at it, we held down to our material margins. We took the prudent decision of not discounting significantly when the growth is impacted largely due to unseasonal rains. So that helped us to hold the material margin right. And it's the operating leverage that did not kick in. As we move forward, we wanted to ensure that the same principle gets applied. And our overall EBITDA margin that we delivered for last year should be there for the balance of the year.
Okay. Morning, this is Rima here. So talking about growth and looking ahead, you're also planning to get into adjacencies. I think switch gears is something that you are looking at. You're rethinking your Nirlab business because it's not provided the kind of synergies that you were hoping for. Sorry, I'm making a mistake over here. But I believe you are looking at some sort of, increasing the categories or trying to get into, more, segments. Could you give us an indication of that?
Yeah. See, first and foremost, we have announced already that we will get into solar rooftop. This is something that we made an announcement in the last quarter. This is a very high target addressable market available to us. And considering the kind of success that we have got in solar pumps, we think there's an opportunity to replicate the same here And today, if you look at it, Indian homes need a brand that is trusted. And a large part of Indian household has grown with Crompton over multiple decades. And if it is going to come from the house of Crompton, a solar rooftop is something that people are really would be appreciating it and accepting it. And we think there is good amount of headroom for us to grow there. Even if I look back at the acquisition that we made on Butterfly, we are into our third year right now, and the business is back on growth track. Margins are improving in Butterfly, and the new launch or the brand refresh that we did in Butterfly recently is also showing us good results. Outside this, we are also looking at few more categories. Allow me to communicate about that in detail closer to date. But yes, fundamentally, what we are looking at is there an opportunity for us to expand our total addressable market by 2 to 2.5x from where we are today. So we are looking at few large categories where we have a right to win. It's also important to note that whenever, wherever, whichever categories that we enter, we are not going to operate as one more player. Our endeavor is, can we become a top 3 player in these categories over a period of time? The success on this has been demonstrated in the past. Today, we are a market leader by a mile in fans, and so far.
Just very quickly, sorry, I'm cutting you because we're running short of time. On Butterfly, the performance has been improving, like you said. Can you give us some sense on, aspirational margins? Eventually, as things settle, at the EBIT level, not EBITDA, I have the EBIT margin number here. I think you're at about 4.2%. Where would you like to see, or where do you think Butterfly margins can settle by the end of the year?
I'll start with EBITDA first. Our EBITDA margin has been on a continuous improvement trajectory. Step one is to hit a double-digit EBITDA margin in the next 2 to 3 years, and from there move on to a double-digit EBIT margin also. So business is going to be very, very strong performance in terms of revenue growth. And once the operating leverage kicks in, we do see that will help in expanding the EBITDA margin also. So the idea is to hit a double-digit EBITDA first, and then move towards EBIT also being a double-digit.
Okay, all right. We will leave it on that note. Thank you very much for joining in, and good luck for the rest of the year as well, especially the festive season. Thanks for being with us. That's a word from Crompton coming in. We do have to take a very quick break on that note. Come back on the other side, and we'll have Manisha joining in, focus on the commodity space. Welcome back. Let's look at the commodity markets now. Lots of headlines coming in there as well. Let's go across to Manisha. Manisha, it's Friday. What are you tracking?
Well, I'm looking at gold, and it's at all-time highs, but for all wrong reasons this time around. It's tariffs yet again, and that really seems to be leading to disparity now in case of gold. So when you look at the COMEX December US gold prices, they hit a record highs above 3,500. When you look at the charts, we can see those prices at 3,550 as well at one point in time. But when you look at the spot gold prices, this is where London looks at it. It is trading still at around 33.80 or thereabouts, while COMEX is now trading at 34.90. So the discount or a premium, depending on which market you're looking at it from, now stands at $100 an ounce. When you look at the Indian gold prices, well, we are trading at all-time highs. Now we are looking at 1,02,000 rupees, and this is just for 10 grams. So clearly, 1 crore and 20 lakh rupees when you are looking to buy 1 kgs of gold there. What has happened overnight is, and markets are really reading into the fine print here, US has imposed tariffs on import of 1 kg and 100-ounce gold bars. Now, much of this import that US does comes in from Switzerland. And remember, there is a 39% tariff that you have on Switzerland right now. Now, 1 kilo gold bars are the most traded form on COMEX, and is the reason that you have seen that very big disparity come in for gold prices, the run-up that we saw as well. And let me remind you that we were talking not too far back on how US seems to be importing record number of gold. January was such one month. Feb was okay. March again, we saw very strong imports coming in. So the first quarter of the calendar year has seen very strong imports into US. Now, from where we stand in sense of numbers is that you could be looking at an increase in sense of tariffs that the US consumers clearly will have to pay. When you look at 2024, well, the US imports gained up by almost 5.5%. Value-wise was at around $16 billion there. When you look at volume, well, that, of course, has seen a decline because the way the gold prices surged up. So 12% decline in volume, but a near 6% of gain in value is what we are seeing in gold. It has been only a day, 24 hours to be exact, that we've seen this kind of a move come in for gold. It would be interesting to see today on how London opens and then how US opens in sense of gold, and how do we really work the maths when it comes to the global gold prices therein. But that's about gold. I also want to quickly make a point about crude oil prices, because we are heading for a weekly decline of 5% into this one. It's trading at a 1-month lows right now. $65 an ounce is where we are looking at WTI crude prices trading at this point in time. And this has been a worst weekly decline, pardon me, that you have seen in case of crude oil prices since the month of June. So the US and Russian presidents could be meeting in days to come, and that has taken some premium off the prices there. Interestingly, with the kind of OPEC production increase that we have seen, that seems to be weighing onto the prices too.
Thank you very much for that. Market sliding at the day's low now. 150 points gone in the Nifty. The Nifty's at 24,450. A level to watch will be yesterday's intraday low of 24,344. We're 100 points away, but that will be a key marker. Get into a break. On the other side is a special segment. Lata will speak to Mukesh Kumar Surana, former chairman, managing director of Hindustan Petroleum, to understand the dynamics of Russian crude versus US crude.